Buyers in Sarnia-Lambton just got the most leverage they've had in about 10 years, and the benchmark price went up, and both of those are true, and I'm going to show you how today. I'm Sean Ryan with the Blue Coast team and CB Southwest Realty. For those that are new to the channel and may not know who I am, this is your July 2026 numbers for the Sarnia-Lambton Real Estate Board, straight from CREA, which is the Canadian Real Estate Association, and the Sarnia-Lambton Association of Realtors. Stick around the ad. I'm going to give you the buyer's read and the seller's read separately because they are not the same advice this month. Inventory build stopped, which is fantastic. New listings in July, 333. Last July were 333 as well. So zero change there. Active listings, 680. Last July, 680. So zero change again. And the first time since a while that supply has not grown, which is amazing. But sales did fall about 6.8% to 136. And so months of inventory still climbed to 5 months of inventory. And that's the highest July we've seen in a long time. But supply stabilized, demand did not. And that is why buyers still really have the upper hand in some price ranges. But it also means that pressure pushing prices down may have finally stopped and hit that ceiling, which is really great for the market. The MLS HPI benchmark is up to 497,000, up, that's 1.4% from last month, and then down 4.4% year over year, and then down 0.3% from 5 years ago. So essentially flat for a long time now. And then I want to explain a bit more about HPI and why we're using that compared to average price and median price. So the average price tells you what got sold. A $2 million sale in that 136 sale month will move it dramatically, especially in Sarnia-Lambton. The benchmark tracks the same house every month. 3-bedroom, 2-bedroom, bathroom, how much square footage, when it was built, attached garage, gas, forced air. Average price answers what's sold. Benchmark answers, what is my house really worth? And those are really different questions you need to be asking yourself. And then there's the other two. Compared to that is average price, $539,000. Down 3.2%. Median price, $459,000, down 1.6%. So you can see they're a little bit different. 3 numbers, 3 directions, the benchmark up, median barely down, average down the most. That tells you that the middle held and the top thinned out. The mix shift a little bit, but not a value collapse by any means. And the proof, the single family median actually rose 3.2%. to 490,000, while the single family fell a little bit on the average. But let's look at style a little bit. What are we seeing in the different styles on a 1-story benchmark? 542,000, down 3.4% year over year. 2-story benchmark, 442,000, down 5.6% year over year. 100K premium for single family living in Sarnia-Lambton. So let's look at some sales activity though. July 2026, 136 sales versus last July, down 6.8% versus 2019. We're going back. Pre-pandemic, we're down 20.9%. 2021, the peak, 25.7%. And 2016, down 23.2%. But up 9.7% from July 2023, the bottom. So it has gotten better over the years, which is fantastic. Now, let's separate the month from the year and give you a bit more context of what we're seeing there. July alone, down 6.8%. Year to date, 870 sales, down 9.2%. This year is worse than the month. The spring was the problem. July was actually a relevant improvement for the most part compared to most. 870 is the weakest July on record that we've seen in a long time. Listing inventory, new listings this year to date, 2119, up 1.7%, the highest on record. Active listings, 680, up 115% versus 2019, up 353% versus 2021. So a lot more inventory, as we can see. The most inventory we've seen in about 10, 11 years. 2021 had 150 homes in the market in July, and we have 680 now. So big difference there. Year-to-date average activities, 580, actually down about 3.2%. The first year-to-date inventory decline in a few years, which is great. Sellers did not retreat. They just kind of stopped adding inventory. A bit more people are maybe holding off, looking at doing that move, not putting their home on the market. The months of inventory teaches the rule really here. I want to teach you the rule about the months of inventory and give you a bit more clarification on that. And here is the rule. Really memorize and know this so you have a bit more context when people are talking about stuff. Under 4 months equals the seller's market. Pretty simple. 4 to 6 months equals the balanced market. Over 6 months equals a buyer's market. So July 2026, 5 months of inventory. That's balanced. But it is the soft end of that balanced market. The series, 0.8 in 2021. Then it went 2.8, 3.4, 4.1, 4.7, and now we're at 5. But keep in mind, not all price ranges are created equally. So some price ranges are actually only have 2 months inventory. Some have 10 months right now. That is just the average on the market right now, 5 overall. So not all price ranges, not all housing categories are treated equally. So keep that in mind. And 5 month means if nothing else was listed today, it would take 5 months to clear the market. In July 2021, that number was 3.5 weeks. Sales to new listing ratio, 40%, down from 43%. So a bit different there. And then how's the negotiation climate? What are we seeing for pricing right now? Sales to list price ratio is 96.7%, down from 97.4, the weakest July in a long time. So I want you to keep that in mind though, is that is from last listed price. So if a home went on the market and kept doing price reductions or kept getting relisted, it's 96.7% of the final list price, not the starting list price. There's a big difference there. On a medium price point, that home is roughly $15,000 off the asking price. Medium days on market, 27, up from 21 last July. So yeah, things are taking a bit more time to sell right now. And again, this was the slowest July we've seen in 11 years. In 2021, it was 9 days. Again, we keep going back to 2021, but it's really relevant in our market right now still, because people are still comparing it to that, especially sometimes sellers. We're seeing conditions are back, financing, inspection, very normal again. Also condition the sale of the house we're seeing in those negotiations. Now let's look at home styles a little bit and where those are coming in Sarnia-Lambton. Bungalows, 49 sales, average 599,000. That's more than the next 3 styles combined, really, for how many sales there were. 1.5 stories, there's 18 sales at 317,000. 2 stories, 17 sales, 744,000. So 2 stories are getting more than bungalows for the sales right now. And that is what that dragging the average around. And then the raised ranch really is 13 sales at 550,000. This is a bungalow town. This is a bungalow place. Aging demographics, retirees, downsizing. That is not a trend. That is really just the shape of Sarnia-Lambton. The majority of the houses in Sarnia-Lambton are bungalows. It is the greatest sales area. It always has been. It probably always will be for a very long time. So if we went to some neighborhoods and looked at a bit how these things are shaping up. Sarnia North, we saw 69 out of the 129 area sales. 184 new listings, average 506,000. As Sarnia North goes, the market goes, which is good. Point Edward and Lakeshore, the highest 12-month average at 726,000, and nearly 240,000 above Sarnia North, but only 9 sales on the 25 listings. So the high end is kind of still moving slowly. And where things actually are selling, Lakeshore converted 74% of all listings. And it's Skillen, 67%, Brights Grove, 100%, pretty much the new listings came unsold. So Brights Grove is a very sought after community still. And small samples, but the pattern is real. Well-priced properties outside of the city core are moving. So like acreage, stuff like that, hobby farms, specialty properties, those are still selling very well. Now, if we want to break this down to the different price categories, stay with me here. I'm going to go over a bunch of numbers with you, and they might go a little fast. 400 to 500,000, 28 sales. So that is still the busiest band in the market. And it's kind of cool when you think about it. Sarnia-Lambton still has that many homes every month selling between the 400 and 500,000, which is fantastic. 500 to 622, so still a great sell point. 300 to 421 sales. So there were still 21 sales between 300 and 400,000. Like, that is fantastic when you think about it. And then 600 to 700, 17 sales. 300 to 600K, 700 sales. We brought that up. About half of the entire month. under 300K, 25 sales. So still 25 sales under 300K, which is great. Entry level is still transacting well, and above 700K, about 21 sales total, which was really good actually for the Sarnia-Lambton market. Selling between 400 and 600K, you are the deepest buyer pool by far. And in the county above 800K, still a very small audience. So price it right is the best thing we're seeing right there. And we're still seeing those first time buyer products doing well. So if you own a house between like the 400 to 600,000 and it's priced really well and it's in good condition, you are still getting top dollar for the house. We're even seeing multiple offers sometimes. So you're really selling that first time home buyer house, and you're getting a really good advantage as you move into your new price category, because we are seeing some pretty good negotiations in there. So definitely we're seeing that category win one of the best. So let's look at some national context. What's going on here right now? Bank Canada held its rates at 2.25% as of August 5th. As of July 15th. And then that's the sixth straight hold. So unchanged since October 2025. Prime rate 4.5. Best 5-year fixed is 3.94 to 4.04. And the best 5-year variable is 3.35 to 350. So not bad. The variable is currently cheaper than the fixed, and that's just how it is right now for the most part. And do we see any rate changes in the next little bit? There's a very good possibility we don't see any rate changes. On the benchmark homes, though, we're seeing 20% down roughly. So benchmark home price on 20% down is roughly $2,105 a month fixed versus $1,980 variable, and that's about $125 a month difference. But if you're buying that discount with the rate risk, you have to really look at your rate and risk tolerance when making those decisions. And the bank just dropped the language about cuts and hikes. So we don't really know what's going to happen with the rates, if they're going to go up or they're going to go down. So just choose wisely if you're doing the variable, and just make sure you're reading all your options. And they see it balanced right now, but next decision is September 2nd. So we'll see what happens at. Korea's July 15th forecast, national sales down 1.4% in 2026. Average price, $686,000, up 1.1. Ontario is the only province to expect to see sales grow this year, really. And that does not really surprise me too much. So is there any policy changes? Yes, we got the federal GST rebate for first-time homebuyers is now allowed. So up to $50,000 just for the GST point. Ontario is matching EST rebates as well. Forms went live mid-July, combining that ceiling up to $130,000. So if you are looking to buy a new home in Ontario, you could save up to $130,000 right now, because there is kind of no HST on a new home. Great incentive for buyers, first-time buyers, secondary buyers, whoever, in that new home construction market. I've seen this policy really hit one market segment. Is that if you own a new home that's 5 years or newer, it's going to be hard to resell it for a profit without losing money, because with those HST rebates there, I could probably build your home cheaper. Now, there's a very good possibility, or pretty close. So keep that in mind. And that's only on new home construction, not resale. Right? Obviously, there's no HST really on resale. And the benchmark homes here was built in 1972. So most people will not touch this, so it should be fine. What does apply here? Ontario land transfer tax rebates up to $400,000 for home buyers, $1,500. So the FHA home buyers plan, we'll see how that shapes up as well. And then the benchmark home is $479,900, and that is 21 under the 500,000 line, where the minimum down payment rules change from 5% down is about 24,900. So lots going on there. I said that a little fast, so let me know if you need any more context on there. So here's what I want you to look at. I got a couple different things I want to do differently. I want to give you a bit of a buyer read and a seller read, and that's what I'm going to go into right now. Okay. First is the buyer read. This is what I'd be doing right now if I was in the market, and stuff that I'd be looking at and knowledge I want to know. Get fully pre-approved, not pre-qualified. Okay, just keep that in mind. There is a difference. It's going to change quite a bit. In a 5-month market, the buyer who closes cleanly wins, not the one who bids the highest. So keep that in mind. It's not about outbidding and doing that. It's how do you structure yourself and make smart offers and smart choices. Know where the competition is. The 400, 600. You have company. We know that. Above 700K, you are often the only one in the room most of the time. So keep that in mind as well. Run fixed and variable numbers side by side. Variable is cheaper today. ask your broker or your bank to model both at renewal, not just at closing. And understand what just changed. The benchmark went up 1.4%. Supply stopped growing. So if you're waiting for a bigger drop, the setup that produced the last 2 years is changing. So we could see a dramatic change in the market soon. Like, I'm not saying bidding wars and things are going to be as rapid as they were in the past, but that option, that opportunity right now could start to close a little bit more on different price ranges. So keep that in mind and ask for a closing cost worksheet. So most first-time home buyers they leave the $5,000 on the table because nobody itemizes the rebates and stuff available. So make sure you're asking like your banker, your mortgage broker, the lawyer, the realtor, whoever you're working with, what rebates or what's available for me? How can I save some money? Let's not leave these things on the table. So now let's look at the seller rate. What are we seeing there? Price to the benchmark, not to 2022. 497,900 down 4.4% year over year. Your neighbor's your 2022 sale, your neighbor is not a comp. Right now, we are going back comp. Sometimes I will go back comps a year and a half right now. Maybe I'll go back 2 years because the market overall has been pretty flat, but we can't be looking at what stuff sold for in 2022. And I'm sorry, if you bought the house in 2022, there is a chance that you may lose money. We're seeing most of this lose happen from out-of-town buyers that came in, especially ones that brought out-of-town realtors. We're seeing those are the ones that are losing the money from the 2022 purchases, but there's a lot of people that aren't. They're not losing any money. They're making money still. So just keep that in mind. Bungalow owners, you are in the strongest position in this market. 49 sales, highest volume by far, and one story is holding value better than two-story. Lead with single family living. So it's always been that way in Sarnia-Lambton. It's probably going to be that way for a long time because of the demographic. Above 700K, preemptive pricing is the whole game. But 21 sales happen up there all month. List high and reduce later. You can chase the market down and net less. So keep that in mind. Sometimes that strategy is not a great one when you're in those higher markets. 4, your first 14 days are your leverage. Medium days on the market is 27 days, which means half step longer. Stale listings get treated like distressed inventory, no matter how nice the home is. So you do, after about 2 weeks on the market, you lose a lot of your negotiating leverage. So don't wait too long to do a preemptive price adjustment on your home. Don't just let it sit for months and months and say, I'll take less or I'll negotiate down. As a realtor, I cannot advertise on the listing. They will take less. And to be honest with you, it'd be a really bad ad. Sarnia North sellers, you are one of 184 new listings competing for 69 sales. So precision matters again. If your home's not selling in 27 days, 30 days, most likely it's price, it's not location. So keep that up in mind. Okay, what do we got coming next? September 2nd, Bank of Canada. Consensus is it'll be another rate hold. Watch the language, not the numbers. August 14th, Korea national sales are going to be coming out as well. October 16th, the next Korea forecast, that's Canadian Real Estate Association, of what they see going to be happening. The fall market, September, October, historically, our second strongest window with supply plateaued. A normal fall could pull inventory back up under 4.5 very fast. If you are looking to sell in the fall and winter markets, a little plug for our team here is we will come get your photos of your house now this summer, why it's looking the best, put them on file, and then we can showcase your yard in the winter months still. So plan ahead if you're thinking of selling this fall, winter, or even spring, really. And the one to watch is August, coming at 680 again. Will it come in at 680 again? If yes, the plateau is real. And if it climbs, the softening could resume. So keep that in mind. We do these every month. So we're always updating you on all the inventory and what's going on here in Sarnia-Lambton. Okay, 5 months of inventory is textbook balance. Not a crash, not a boom. We have not had a generally balanced market here since 2016. Most people buying and selling today have never actually experienced one. It is slower. It's more negotiable. It's more normal. There's nothing wrong with this market. So keep in mind, if you want to know about what your home is worth in a 5-month inventory market, not what a website guess is, what the last 90 days of sales said, reach out. Love to talk to you. We're here every month, like I said. Make sure you subscribe, and then I'll click on the link in the description as well. and we'll have one there if you want a free market evaluation that we can just send to you online. So thanks everyone. Remember, put Sean on your lawn, and we'll talk to you next month.